Have you ever wondered what it really means when Bitcoin hits an all-time high again? I mean, seriously, why now? Why is Bitcoin suddenly smashing through the $120,000 mark like it's nothing? What's going on behind the scenes that nobody is talking about, but everyone should know? What if I told you that what's happening right now isn't just another crypto bull run? This is different. This is historic. And if you don't understand what's unfolding, you could miss the greatest wealth shift of our generation. In the last week, Bitcoin shattered all previous records, surging past $120,000 per coin. It's not a fluke, and it's not just retail hype. This time, institutional money is flooding into the market. We're talking about the biggest names in finance. BlackRock, Fidelity, even tech giants like Apple are making moves. Quietly, carefully, but unmistakably, they're positioning themselves for something massive. But why now? What's changed? 2 words: crypto regulation. This week, the United States Congress began serious discussions around a package of crypto-focused bills. Legislation that could redefine how digital assets are treated in America. You won't see this plastered all over the mainstream headlines, but behind closed doors on Wall Street and in Washington, D.C., this is all they're talking about. There are 3 core bills under debate: the Genius Act, which establishes a framework for stablecoins and permits regulated banks to issue them; the Clarity Act, which finally defines whether cryptocurrencies should be classified as securities or commodities, solving one of the longest-running debates in crypto; and the Anti-CBDC Act, a bill aimed at preventing the Federal Reserve from issuing a centralized digital dollar without direct approval from Congress. These laws, especially together, represent a massive turning point. For the first time, America is signaling to investors that crypto is here to stay. Not as a shadow economy, not as a fringe experiment, but as a regulated, recognized asset class with real backing, legal structure, and government oversight. And for institutional investors, that's the green light they've been waiting for. Regulation means clarity. Clarity means confidence, and confidence brings capital. Lots of it. This surge in interest is already showing up in the numbers. In the second quarter alone, Fidelity doubled its crypto exposure. BlackRock's Bitcoin ETF ballooned to $19 billion in assets under management. Apple, in a move that shocked insiders, discreetly purchased over $500 million worth of Bitcoin for its balance sheet. They didn't announce it, they didn't tweet it, but it's there, filed in the reports. These aren't wild Reddit rumors. This is verifiable institutional adoption. And while Bitcoin is making headlines, don't ignore what's happening in the altcoin market. Tokens like Bonk, Pepe, and Pengu are experiencing massive inflows, driven largely by a new generation of retail investors who believe they're discovering the next breakout star. Meme coins are no longer just jokes. In some cases, they're speculative assets with serious momentum. That said, it's crucial to remember that many of these coins are driven by hype, FOMO, and social media buzz. If you're going to jump into this space, you need to know what you're doing. You need a strategy. Otherwise, you're gambling, not investing. So, what does all this mean for you? If you've ever felt like you missed out on the last bull run, the one that took Bitcoin from 10,000 to 60,000, this is your second chance. And some believe it might be the last one of this magnitude. But here's the truth that most influencers won't tell you. Wealth is not built when prices are high. Wealth is built when you understand why prices are high and where they're likely headed next. It's not just about riding waves. It's about seeing the storm before it hits and positioning yourself accordingly. Look, I get it. I know what it feels like to think you're too late, to scroll through charts and news headlines and feel like you've missed the boat. But it's not too late. In fact, if you're watching this right now, you're still early. Because the masses haven't even arrived yet. They're still skeptical. They're still dismissing Bitcoin as a bubble or a fad. They don't understand what's really going on, and they won't until it's too expensive to ignore. Think back to the early days of the internet. People mocked it. They said it would never replace brick-and-mortar stores, that no one would ever shop online, that digital banking was a joke. Now look at us. Think about when Bitcoin was just a few cents. When it hit $1,000, people said it was overpriced. At $10,000, they said it was a bubble. At $50,000, they called it insanity. Now it's over $120,000, and suddenly everyone's paying attention. But by the time the majority gets in, the biggest gains are gone. So why are people turning to Bitcoin now more than ever? It's not just about getting rich, it's about getting free. Inflation is quietly eating away at your savings. Your dollars today buy less than they did yesterday. Banks are more fragile than they appear. One unexpected crisis, one run on liquidity, and it all starts to crumble. Meanwhile, central banks keep printing, governments keep spending, and the value of your money keeps shrinking. Bitcoin offers something different. It's a decentralized, limited supply asset that can't be manipulated by any single government or institution. It's not just a currency. It's a vote against reckless spending, a vote against endless money printing, a vote against a system that no longer serves the people it was designed to protect. And for the first time, governments are beginning to recognize that they can't kill it. So instead, they're choosing to regulate it. They're choosing to legitimize it. That's why the regulatory shift happening right now is so important. It doesn't just protect investors. It validates the entire space. It tells the world that crypto isn't the Wild West. It's the new frontier. And you can choose to be part of it, or you can watch it pass you by. So how do you get started? You don't need to be an expert. You don't need a finance degree or a six-figure bank account. You just need to start small and smart. First, educate yourself. Follow trusted sources. Read, watch, ask questions. Second, secure your assets. Use cold wallets. Choose reputable exchanges. Protect your passwords. Third, allocate what you can afford. Even $50 is a start. The goal isn't to time the market perfectly, it's to participate consistently. The road ahead is full of possibilities. If these bills pass, and early signs suggest they will, we could see US banks launching their own stablecoins. We could see Bitcoin becoming an official treasury asset for dozens of Fortune 500 companies. We could witness a new wave of retail adoption driven by altcoins, gaming tokens, and decentralized finance projects. Some analysts predict Bitcoin could hit $250,000 or more by the next peak. Sound crazy? So did 20,000 once. So did 100,000. And yet here we are. This moment, right now, is historic. The intersection of policy, technology, and finance is creating a tidal wave of change. And you are standing at the shoreline, watching it rise. The choices you make today could define your next 5, 10, even 20 years. You can choose to act. You can choose to learn. You can choose to position yourself before the crowd rushes in. So I'll ask you again, what's stopping you? If this message resonated with you, if it made you pause and think, then do something about it. Subscribe to this channel. Like this video. Share it with someone who needs to hear it. And most importantly, join the conversation. Do you believe Bitcoin can reach $250,000? Do you think these new regulations will help or hurt the market? Is this the beginning of mass adoption? Drop your thoughts in the comments. Let's talk about it. Stay smart, stay free, stay ahead.